We cut our risk allocation by about 3 or 4%. We were overweight equities. We went to a neutral on equities. And the reason we did that was if we go back to last week when we cut our allocation and you look at the way that the trade talks faltered, and I would say faltered is a euphemism for really collapsed in this situation. No one saw this coming. If we look forward, given the fact that the Chinese don't seem to have a lot of interest right now in meeting us even halfway, much less further than halfway, we have a potential very serious overhang on the economy in the form of not just the tariffs on the increasing 10 to 25% on the $200 million, but also on the additional $325 million. And there's no question about it. The tariffs are hurting the U.S. more than they're hurting China right now.
So, and yet, if you see that kind of scenario, Tony, you only cut it to what you call a neutral position on equities. Explain to me what neutral means in terms that I can put numbers on. Is that 60% equities, 40% fixed? What is it?
So neutral is basically, we're long-term investors at Wilmington Trust. Neutral is basically a portfolio that reflects about, for our flagship portfolio, around 60% equities. The reason that it's only down to 60% and not significantly lower than that is because we have to recognize the fact that the president has the ability to change the narrative. If he decides that for political reasons the economy is going to weaken significantly to imperil his reelection, which we think is a near certainty if we don't get a deal done and they actually move forward with the additional tariffs, he can move back into the fray and negotiate what would be considered to be, let's call it a bad deal. A bad deal in the sense that it doesn't get what the U.S. wants, but nonetheless a good deal for markets, because any deal is a good deal for markets. And so we don't know from an organic standpoint. We know from an organic standpoint the U.S. economy is doing quite well, but we don't know what he's going to do. We can't control that. So right now there's just so much uncertainty. Neutral is the best place to be.
Michael Farr, with these talks going the way they are, do you think we're more likely to have any kind of deal, even if it's not the best one the U.S. might have wanted? Do you think ultimately in the next month or two we still come to that conclusion, or is that in doubt for you right now?
Yeah, I think that we've seen that we can push the goal line forward whenever we need to. So, you know, the goal line is moving, and we'll find out whether they really mean a month or whether they mean 2 months or maybe sometime in the fall. That narrative is changing. You know, I listened to what Jim said, and I'm not as smart as Jim or Tony to figure out what I need to be doing right now. I have a much longer view, and trying to respond, I think, Kelly, to these sort of short-term moves in the markets could really keep you very busy and not all that productive, or at least from my perspective.
Right.
So I think you have to look a little bit longer term and recognize that a lot of what we're hearing is just noise, not to mention a shift from depending on every utterance out of the Fed now to depending on every tweet from the president as to how the trade talks are going.